Welcome back to Curious Commerce. The topic cash flow statement, part 10. In the session, we will discuss about the applications of cash flow statement in service industry, hospital industry, and hotel industry. Now let us understand cash flow using a service business example. Service businesses are different from manufacturing or trading businesses because they do not produce or sell any physical goods. For example, coaching centers or the education institutions, consultancy firms, IT companies, hospitals, repair service centers, etc. Their cash flow pattern is unique. In service businesses, there is a very little or no inventory. For example, a coaching center or a education institution or a consultancy firm does not need to store goods, right? So, no money is blocked in stock, no warehouse or the storage cost, and very less working capital needed. This is an advantage compared to manufacturing businesses. However, cash flow challenges still exist. Mainly in service businesses depend on human skills and expertise. Therefore, major expenses include staff salary, professional fees, office rent, utility expenses, and software subscription. Among these, salary is usually the biggest expense. Employees must be paid monthly whether customer pay or not. So cash must be available regularly. Service companies usually provide service first and receive payment later. For example, a consultancy firm completes work worth around 2 lakh rupees, but payment is received after 30 or 60 days. During this period, salaries must be paid, office expenses continue, but cash has not yet arrived. The end result is cash shortage may occur. Suppose monthly expenses of a firm, salaries around 3 lakh, office expenses around 50,000 rupees, and total monthly cash needed is 3,50,000 rupees. But customer delay payments, even though business is profitable, cash is insufficient. Cash flow statement shows this clearly. Cash flow statement helps management to understand whether payment are coming on time, why cash balance is low, need for better billing and collection system. Companies then improve advanced payment system, faster billing and better credit control. Service businesses usually have low inventory, high salary expenses, and cash flow depend on customer payment time. So timely billing and collections are critical. In service businesses, cash flow is healthy only when customers pay on time. Let us understand cash flow problems using a hospital business example. Hospitals are service organizations, but their cash flow situations is more complex because of insurance payments and high operating expenses. Many hospitals earn good revenue but still face cash flow pressures. The situations of the hospital Operational activity. Hospitals provide services like patient treatment, surgeries, emergency services, diagnostic centers, pharmacy services. Patients may pay through direct cash payment or health insurance or the corporate medical insurance schemes or any other government health schemes. Here is where the cash flow issues begins. A large portion of the hospital income come from the insurance companies. The process usually works like this. Patient receives the treatment first. In second stage, hospital sends claims to insurance companies. In third stage, insurance companies verify the documents. The last stage is the payment is approved and released later. This, the first stage to last stage, process may take 30 to 90 days or even longer. So hospitals has already provided the treatment, but cash is received much later. Revenue appears in accounts, but cash has not yet arrived at. Hospitals have very high operating expenses that must be paid regularly, such as doctor salary, nurse and staff salaries, medical equipment maintenance, medicines and supplies, electricity and utilities, building rent or loan payment, ambulance and emergency services. These expenses must be paid every month, regardless of payment delays. Cash flow stress despite the revenue. For example, monthly hospital revenue is 1 crore rupees, but the insurance payment pending is 60 lakh. Actual cash received is 40 lakh rupees only. The monthly expenses is 70 lakh. The result is hospital earns the profit in accounts, but cash available is less than expenses. So hospital faces cash shortage despite of good revenue. Cash flow statement helps hospital management to understand cash actually received from patients and insurers, cash spent on salaries and operations, why cash balance is low despite of high revenue. This helps the management for to frame the plan related to the working capital loans, faster claim processing, and advance payment policies. Generally, hospitals often face good revenue, high service demand, but cash flow stress due to payment delays. Thus, managing cash flow is critical for hospital survival. In hospitals, treatment happens today, but cash often comes much later, and cash flow management keeps the hospital running. Let us understand the cash flow challenges using a hotel business as an example. Hotels often appear profitable, especially during tourist season. However, their cash flow situation is affected by seasonal income and continuous expenses. The general situations in hotel business as follows. Hotels earn income from room booking, restaurant services, events and conferences, and tourism packages. But hotel income is usually seasonal. depending on tourism and travel demand. For example, hill stations are more in summer, beach hotels are more in winter or holidays, pilgrimage hotels are during festival season. So, income is not equal throughout the year. During the peak season, rooms are fully booked, restaurant sales increased, events and tourism also increase. Therefore, cash flow becomes high. But during off season, tourist visits gradually reduce, rooms remains empty, revenue falls sharply, cash flow becomes very low. The major challenge is that the hotel expenses do not stop in off season. Hotels must continue paying staff salaries, electricity and maintenance, property rent or loan or EMIs, security and housekeeping costs, equipment maintenance, and marketing expenses. These expenses continue every month even if rooms are empty. For example, peak season monthly income is around 40 lakh rupees, off season income is rupees 10 lakh, but monthly expenses remain 25 lakhs. The end result is during the peak season cash surplus occurs. During the off season, expenses exceed income, leads to cash shortage or deficit occurs. So even profitable hotels face cash flow stress in slow seasons. Cash flow statements helps hotel management to understand seasonal cash inflows, plan savings during the peak season, manage expenses during off seasons, arrange working capital if needed. Hotels usually save surplus cash earned in peak months to survive off-season periods. Hotel businesses has the certain characteristics. The income is seasonal, but the expenses are continuous. Excess cash in the peak season, cash shortage occurs in the slow season. Therefore, proper cash flow planning is essential in hotel business. Success depends not only on peak season profits but on managing cash during the off season. Thank you for watching. Please share, like, and subscribe to Curious Commerce. Follow our WhatsApp channel, Curious Commerce Financial Management Hub, for daily finance learning. The topic cash flow statement will be continued in part 11.